This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, March 17th, 2016. Euro dollar. So it looks like the market is poised for additional upside over the coming sessions following this latest break above the previous weekly high around 112.19. At this point, the fresh upside now exposes a retest of the 2016 high further up, which comes in at 113.77. We would need to see a break back below recent lows at 10.58 to take the immediate pressure off the top side. Sterling dollar. So cable remains confined to a downtrend despite Wednesday's recovery, and the market is looking for a lower top in place at 144.37, which will be confirmed on the next downside extension below recent 7-year lows at 38.36 and towards a measured move objective which coincides with the 2009 multi-year base at 135. At this point, only back above the recent high at 144.37 would negate this bearish outlook. Dollar yen. So dollar yen continues to be locked within a bearish consolidation and could be poised for a breakdown below the recent multi-month low at 110.98. A break below that level would expose the next measured move downside extension towards the 107 to 108 area further down. At this point, we need to see a break back above 116 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to be very well supported in dips, and the market is confined to a broader recovery structure, favoring an eventual upside beyond the recent multi-month highs at 112 and towards 115 further up. At this point, only back below 107.15 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie continues to extend gains to fresh 2016 highs, with the market now poised for additional upside towards next key medium-term resistance at 78.50 further up. At this point, it would take a break back below previous resistance downturn support at 73.85 to take the immediate pressure off the top side. Dollar CAD. So dollar CAD continues with its impressive correction off those recent 13-year highs, near 13-year highs from January at 146.90, with the market trading over 10% lower and now trading back towards critical psychological barriers at 130. At this point, the overall broader longer-term outlook continues to favor upside, but the market could see additional weakness in the sessions ahead back towards the October base at 128.32 before it looks to recover. We would need to see a break back above 134.47 at this point to take the immediate pressure off the downside. Kiwi dollar. So Kiwi continues to trade within a choppy consolidation, though ultimately the market is expected to continue to be very well capped on rallies up towards 69. Recent resistance at 68.20 is in sight, but again, any rally should be very well capped ahead of the next downside extension, which will be strengthened on a break below 65.46, exposing 63.47 further down. SPX 500. So the S&P 500 continues with its bid off those early February lows at 1808. Those were multi-month lows, but the market should still look to put in some form of a meaningful lower top, a medium-term lower top, ahead of the next downside extension back towards 1808 and towards the 1600 area further down. At this point, only a back above 2050 would really compromise this newly adopted bearish outlook. Gold. So gold continues to be very well supported on dips, with the market shifting its structure over the past several weeks and now focused on a further upside. The key focus now is on a retest of the 2015 peak from January of 2015 at 1307 further up. Any dips should be very well supported now ahead of that previous resistance now turn support at 1191.